Now, for the last accounting period, for the last row of our amortization table, please pay careful attention to this. We must not follow the same procedure we did for the years 2024 and 2025 to compute for the interest income for 2026, and then the amortization and the carrying amount. Otherwise, the carrying amount of the loan on the date of the maturity will not be exactly equal to the principal amount of 6 million. When in fact, as already mentioned, it must be exactly the same amount as the principal amount of the loan. Hence, for the last row of the amortization table, the right approach is to first write the principal amount of 6 million here. Then, subtract the previous carrying amount of 5,895,304 and write the difference here as the amortization for 2026. If the amortization is 104,696 and the interest received is 720,000, how much must be this interest income here? $824,696. We have to add 104,696 to 720,000 to get this interest income. This is our guide. If we know these two figures, 92,406 and 720,000, how can we arrive at this amount? We have to add. Or if we know this 81,058 and this 720,000, but we don't know this interest income, how can we get this interest income? We have to add to get 801,058. So same thing here. To get this amount, we have to add 104,696 to 720,000 to arrive at this 824,696 interest income for the year 2026. Now that we have completed our table, let's double check. 81,058 plus 92,406 plus 104,696 equals 278,160, which is the balance of the unearned interest income we had recorded here on January 1, 2024. Otherwise, something is wrong in our amortization table. So again, please keep in mind that for the last period or the last row of an amortization table, do not do the same procedure as in the previous periods. Notice, if we multiply this carrying amount of 5,895,304 by the effective interest of 14%, that will give us an amount of interest income which is not equal to 824,696. And if we subtract 720,000 from that amount, then our amortization for 2026 will not be the same as this 104,696. And if we add that different amount to this previous carrying amount, we won't have the principal amount of 6 million here. Using this table now, we can continue making the journal entries for NRCB Bank. December 31, 2024 now. First, to record the interest received from the borrower of 720,000. Debit, cash, and credit, interest income for 720,000. Also, record the amortization of the unearned interest income for this amount. Recall that the normal balance of unearned interest income is credit. So to amortize it, we must debit it. And then credit interest income for the same amount. Notice that the total interest income for 2024 is not just this 720,000 received from the borrower, but also this amortization of 81,058. In other words, the amortization increases the interest income, as we learned from this previous slide. If the origination fees received from the borrower exceed the direct origination cost, the amortization will increase interest income. And to increase interest income, we have to credit it. But actually, we can combine these two entries into one. We may just debit cash for 720,000, debit unearned interest income for 81,058, and credit interest income for the total of these two. Which is actually this one, 801,058. So notice these column headings. The interest received is debited to cash. The amortization is debited to unearned interest income. And the total interest income is credited to interest income. So these two entries may be combined into one. Debit cash, 720,000. Debit unearned interest income, 81,058. And credit interest income, 801,058. Now, at this point, December 31, 2024, how much is the balance of the unearned interest income? That is actually a common multiple choice question on this topic. I will discuss two ways to compute for that. The first one is this. Recall that on January 1, 2024, its balance stands at 278,160 credit balance. Then, on December 31, 2024, we debited the account for 81,058. Therefore, the balance has become 197,102 by December 31, 2024. I will tell you the second way to compute for this amount in a little while. In the meantime, let's have a follow-up question. How would this unearned interest income balance be presented in the financial statement? Although you learned in fundamentals of accounting that unearned income is a liability account, that's why its normal balance is credit, this unearned interest income is not shown in the liability section of the statement of financial position or balance sheet. Rather, it is presented as a deduction from the principal amount of the loan receivable in the statement of financial position or in the notes to the statement of financial position to show the carrying amount of the loan, which we can see in our amortization table. By the way, this carrying amount is actually the amortized cost, which we encountered in part 1 of this lecture series. Subsequent to the initial measurement, loan receivable is measured at amortized cost. Now, let's have the second way to get this 197,102 balance of the unearned interest income on December 31, 2024 from this table. Just add the remaining unamortized amounts in the amortization column. Let's continue now with the journal entries. December 31, 2025 already. For the receipt of the nominal interest, we have this very same entry, same amount. For the amortization, same account titles to be debited and credited, but the amount must be 92,406 because this is already December 31, 2025. December 31, 2025. Amortization is this amount. On December 31, 2026, journal entries would again be made. Same entry with the same amount for the collection of the interest. For the amortization, debit again unearned interest income and credit interest income. But this time, in the amount of 104,696. And not to forget, the entry for the collection of the principal, because December 31, 2026 is the maturity date of the loan. Debit cash and credit loan receivable for 6 million. Of course, this entry may be combined into one with the entry for the collection of the interest on this same date, December 31, 2026, which we had recorded on the previous slide. Remember? Thank you for watching.